A very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are witnessing some amount of unwinding and unexpected lines. The European futures, the global markets are also soft ahead of the Fed meet. And even though the rate hike to a large extent may be factored in, everybody is expecting almost 75 basis point hike. And with small sliver of people also expecting a 1% hike. But the commentary is something which everybody is keeping an eye out. So that's for the market. Some kind of a profit taking, not a massive crash or anything, but some sideways movement coming in the benchmarks. But broader market continue to be active. Let's take a step back beyond the day-to-day movement of the market and understand what are the factors at play, what's happening in the investing environment. Aashish Sommaiyaa is joining us now from WhiteOak Asset Management. Aashish, afternoon. Thanks for your time.
Hi, good afternoon.
We are talking after a long time. Where have you been busy? Talk to us about how your chats with investor community have been happening. Is the underlying trend of at least the mood among the investors buoyant?
Yes, I think, there is definitely positivity. There is definitely, a positive expectation from India's economy, India's performance. Clearly, a lot of domestic indicators are, contributing to that kind of enthusiasm and that type of positivity. On the other hand, if you actually see in recent times, previously, say about a year back, we were 18,600. We saw close to 15,000. And then now, there has been a really sharp bounce back. So this kind of bounce back definitely has kind of taken people a little bit by surprise. And also it has caused people to become a bit cautious. Because, if you look at it, when I have conversations with people, the fact remains that when 18,700 went all the way down near 15,000, there was a bunch of reasons, which were being attributed as the causes for this decline. And now, anybody who is a keen observer of the market would realize that all those reasons are pretty much prevalent. In fact, Europe and some of the other things have only worsened, and still the market has come back very, very strongly. So, I think this kind of sharp move has resulted in some people at least moving back onto the sidelines, or people getting a bit cautious, getting a bit wait and watch. And it's not just about me saying. If you really ask me, you will see data. If you see mutual fund data, if you see flow data, I'm sure everybody is observing that the gross inflow. I've always maintained that net inflow is not a good indicator because it also has a function of redemptions and stuff. But gross inflow, X of SIP, that should tell you, how people, where people are voting or, where people are putting their money. And I think that is slowing down. So I would say net people are becoming cautious.
Okay. So for a moment, let's also talk about what does the data indicate. There are two schools of thought. One believes that the corporate profitability profile of India Inc. is actually improving greatly. And if you take a 3 to 5 year view, we are talking about anywhere closer to even 20%. Some say even 25%. But for a moment, let's take on average 20% earnings growth of corporate India is not ruled out next 3 to 5 years. Others say that that is a hugely inflated number, 12 to 15% at best or even lower. Because if global growth stalls, we will also stall and our earnings will be rolled back. Which side of the argument are you on?
So actually, I would give a slightly nuanced view. Ultimately, all of us, the return comes from the stock market. Of course, the return is driven by economic performance and corporate performance, right? And, whatever discussion is being had about, say, 15% earning growth or, say, 20% earning growth, I think those are, people are well within their, estimates, guesstimates, projections. And there are reasons to believe that that is possible. Because if you see the decade of 2000 to 2010, for the whole decade, we had high teens in terms of earnings growth. Last decade was a disappointment, and we know the reasons for that. So I would say that there are reasons why people are expecting, again, high teens kind of earnings growth. There are fundamental reasons, and it may well happen. But why did I allude to the stock market is, because if you see the global environment, if you see what is happening with Russia and Ukraine, now it is causing, now actually, that war is now actually veering towards, it's not so much about capturing territory. It seems to be more about, causing economic disruption, mainly relate through energy-related matters. If you see China, for example, the zero COVID policy, on top of it, a real estate crisis quickly transmitting into financial crisis. And then if you see US, last 12 to 13 years of boom, now it is absolutely imperative that to control inflation, they are, what we are talking about. So the point is that if you have a beautiful house in a bad neighborhood, you still do have disturbances from time to time. So what happens is that we can very well argue that our economic performance and our corporate performance in various sectors, we can always make a case that, what is the correlation with the global economy? Is it high correlation? Is it low correlation? We can even make a case that some sectors are actually isolated from the global impact. So as far as economy or corporate performance is concerned, you can have a debate that there are varying degrees of isolation or correlation vis-a-vis the global situation. But when you talk about the stock market, what has been observed, that the stock market is one stock market. In the short term, stock markets do get correlated, even if we were to argue that corporate performance or economic performance is uncorrelated or has low correlation. If you remember nowadays, frankly, and after a very long time, I'm hearing the word decoupling. Last time I heard it was end of 2007. If you really ask me, stock market correlation should not get mixed up with economic or corporate performance. So I think there are reasons to be careful right now. That's how I would put it.
Right. Fair point. Yes, you're right. This time, after 2007-8, decoupling is back on the table. And you also make a very interesting point that markets' relationship with each other and economies, how they are related to each other, should not be confused. Talk to us, Aashish, the biggest themes in your investment thesis or arguments which you are conveying to your clients right now. Where do you draw your strength from?
So see, I think I have, if you ask me or my colleagues, we always tell people not to time it, because when you try to time the bottom, or when you try to time the peak, whichever way you look at it, I think both are equally next to impossible. So today, if you ask me, what I have been telling everybody who speaks to me is that while our domestic performance, I have no reason to believe that the improvements in our corporate sector or the our economy is counter-cyclical to the West. I think that is one source of strength, right? Second is that our, corporate sector, banks. So I don't want to repeat, we all have a qualified audience. Everybody knows exactly where the bullishness or where the buoyancy is coming from. I would just say that, ultimately our market will deliver what our economy and what our corporates will deliver. But that delivery always takes, 2 years, 3 years, 5 years to play out. So having patience, having time horizon is very, very important right now. But if someone were to ask me, what about the next 2 months? What about the next 3 months? Then I would be actually very, very cautious in making any kinds of pronouncement. In fact, I would say that one should be adequately prepared for turbulence, around the corner. So the strength is clearly coming from the fact that we are in a new era, or we are in a new cycle as far as our growth is concerned. We are in a new era in terms of how India is being seen vis-a-vis rest of the emerging market. All of those are signs of great positivity. Whatever I have expressed in terms of concern is only about here and now and maybe the next quarter or so. And all of those are related to our stock market. Hopefully, I'm just worried that our stock market could get impacted by what is happening outside the country. Not so much about the economy or not so much about the 3-year, 5-year prospect.
What about the global setup concerns you most right now? Is it like the rate hike cycle globally may continue longer than what the people are estimating, or even the crash in inflation reading may take time? It may remain sticky the way last data actually came, which could actually make the flows nervous in emerging markets also. What are some of the indicators globally which you are watching very closely?
Yeah, I would say that when so many things are happening together is when one can say that the risks are rising. Let's put it that way. Because ultimately risk gets transmitted. Like for example, energy market, financial institutions. So risk always gets transmitted. There could be a weakest link somewhere. The risk always gets transmitted through some financial institution, through some, like we are seeing energy related things spreading. So, we don't know what could result in risk getting transmitted. But when so many things are happening together, I would just say that the risks are rising, something related. It's more about, not necessary that you or me can point out exactly what can give, but one can just say that the risks are rising. That's the limited point. And I wouldn't point, on your question, I'm not capable to point out specifically whether it is US or whether it is Europe or whether it is China or what. But I can, in my humble opinion, I can just say that when so many things are happening together, somewhere there could be something which is a common link. And, we can't put a finger to it or we can't point out to it. But we should all, the fact that we have great prospects for next 3 years, 5 years, that should not blind us to what is actually happening around us right now. That's the limited point.
Aashish, that's a very valid point. In fact, you have raised a very mature voice of caution which you are drawing attention of our viewers to the show. Thanks very much for joining us today and bringing that differentiated view on the table.
Thank you for having me.
Aashish Sommaiyaa of WhiteOak AMC. Before we take a break,